How much is a rig truck? Once he has located a source of tractor sleepers on hand to him, he is able to get in touch with these sellers and negotiate an arrangement that might be able to meet his desires. Once he has agreed to a cost and its particulars, his next hurdle is to find adequate lending. Now financing arena has become much lesser and more challenging to acquire financing than 2 years ago. Financial institutions in the former that used to back this niche market have either pulled their assortment money out of this field or have customized its leasing requirements. It is not unheard of at the moment this market. The experienced business with excellent credit might be able to get in as low as a couple of costs down plus document fees, but might be essential to have either A or B credit. Other seasoned businesses that don't meet these credit requirements may possibly be mandatory to put up 10-30% down or either place up additional guarantee as their credit scores fall below 600. Most buyers don't get pleasure from these tightening lending qualifications or sheltered out of this market and will start looking for solutions that are open due to market provisions. In addition to the marketplace qualifications of large monies due up front, the traditional financial institution has tailored his risk-reward factor for the failure and possible repo of these trucks. Therefore, the rate and or interest aspect that the lender charges has gone up, making it a bigger test to complete the leasing and once the want-to-be consumer locates his purchase. As the market is destabilized due to market conditions, standard lending has altered as we know it. The lender has acquired another dilemma that makes their equation a minimal extra strenuous. In the past year, the trucking industry has turned into added uneven. As the spread of defaults on the payments of over-the-road trucks, semis etc. have risen to all-moment levels, the institutions have been taking back these trucks by the droves that are earmarked as repossessions. This has caused a dilemma with standard lending practices and trying to keep steady it with a non-producing income assortment. If these financial institutions don't act rapidly and sensibly, the pattern of these two type of portfolios can be upsetting to the lender's bottom line. A repossession is dissimilar than an off-lease since it has arisen due to a default of the lessee for non-payment provisions or a breach of the terms of the lease. Either way, the bank has taken these trucks back and in these days opted to put back into working order these trucks and either put up for sale these trucks or release them. Occasionally, as these inventories either be situated or whatever reasons are moving, the bank will put these items up for auction. At the present moment, the banks have two unique types of lending portfolios to consider and must be required to act suitably. Standard financing on innovative business deals still wants severe lending practices based upon the credit markets and the risk-reward factors lenders make out there in the banking markets. The second type of portfolio for the off-lease and repos require likelihood additional lenient tactic to liquidating their inventories carefully and recreating the income stream for the financial institutions. This will be discussed below. Nowadays, money to begin a lease can begin as minimal as foremost payments only to whatever you might able to reach agreement upon. The buyout clauses on these over-the-road trucks can range from a $1 buyout to 10% to 20% track leases to possible fair marketplace value buyouts. One should recognize these clauses since they have an influence on the passing of title. Additionally, a quantity of banks could offer advantageous monthly payment terms versus usual leasing to obtain their off-lease and repossessions versus the purchaser looking to get a truck at a dealership.